into your money, your future, and why you absolutely can't afford to tune out what's happening with interest rates and inflation. These forces are like invisible hands shaping your daily life, whether you realize it or not. These aren't just Wall Street buzzwords, they're the reason your grocery bill keeps climbing, your mortgage payment changes, and why your favorite pizza place might be struggling to keep the lights on. Every dollar you spend is affected by these big-picture trends. Ignorance is expensive. It's the difference between retiring comfortably and working forever, between building wealth and falling behind. If you don't pay attention, you could miss out on opportunities or get blindsided by setbacks. We're in a high-stakes economic environment, and the choices you make now will echo for years. The market is moving fast and fortunes are being made and lost every single day. The rules are changing fast, thanks to the Fed, global events, and stubborn inflation. What worked last year might not work today, and you need to stay ahead of the curve to protect what you've built. I'm here to break it all down for you step by step and give you the tools to thrive, not just survive. We'll cut through the jargon and focus on what really matters for your wallet. We'll turn confusion into confidence, fear into action, and find opportunities in the chaos. You'll learn how to spot trends, avoid common pitfalls, and make smart moves even when the headlines look scary. This is your 2025 Financial Survival Guide. Plain English, real advice, and no more letting headlines scare you. We're going to make sense of the madness and put you back in control. So let's get educated, get empowered, and get ready to make some money. Booyah! Your financial future starts right now. Let's make it count. Let's cut the jargon and break down two of the most important concepts in personal finance: interest rates and inflation. These terms get thrown around a lot, but what do they really mean for your wallet and your everyday life? Take inflation, for example. Imagine last year's $10 burger is now $11 this year. That's not just a random price hike, it's inflation at work, quietly making your money buy less than it did before. In simple terms, inflation means your dollar is losing its power. What you could afford yesterday now costs a little more, and over time that adds up. Inflation is like a silent thief, sneaking into your life and raising prices on everything from your morning coffee to the gas you put in your car. It affects everyone, whether you notice it or not. Now let's talk about interest rates. Think of them as the cost of money. When you borrow, like taking out a loan or using a credit card, you pay interest. When you save, banks pay you interest for letting them use your money. The Federal Reserve, or the Fed, controls these rates. When the Fed raises interest rates, it becomes more expensive for everyone to borrow money, whether you're buying a house, a car, or using a credit card. Why do they do this? To cool down inflation. If borrowing costs more, people and businesses tend to spend less, which helps slow down rising prices and keeps the economy from overheating. But if the Fed slams the brakes too hard by raising rates too quickly, the economy can skid, leading to less spending, fewer jobs, and even a recession. Think of inflation as a disease and higher interest rates as the medicine. The right dose can help, but too much can hurt, making it a tricky balancing act for policymakers. Runaway inflation can destroy your savings, erode your purchasing power, and create uncertainty about the future. That's why it's so important to keep it in check. Understanding this constant push and pull between inflation and interest rates is the first step to making smarter money moves, whether you're saving, investing, or borrowing. Burn these basics into your brain. They're the foundation for everything else you'll learn about money and how to make it work for you. Welcome to 2025's economic tug-of-war, where every dollar feels like it's being pulled in two directions. On one side, we have the Federal Reserve, determined to rein in inflation. On the other, we have stubbornly high prices that just won't budge. The Fed's been hiking rates aggressively, hoping to cool things down and bring inflation back to that magic 2% target. But despite their efforts, inflation is proving to be a tough opponent, sticking around longer than anyone hoped. That means high interest rates are here to stay for the foreseeable future, and the impact is hitting households and businesses alike. We're all feeling the squeeze, whether it's at the grocery store, the gas pump, or when the bills come due. Everyday essentials like groceries, gas, and basic services remain stubbornly expensive. And if you're looking to borrow for a home, a car, or even just to cover expenses on your credit card, you're facing some of the highest borrowing costs in years. Unlike previous economic cycles, inflation isn't dropping quickly. Why? A strong labor market keeps wages up, supply chains are still fragile from recent shocks, and energy prices swing wildly, making everything less predictable. It's like being caught in a vice. Your paycheck doesn't stretch as far, and the cost of financing life's big moments is higher than ever. Every decision feels weightier, every dollar more precious. In times like these, it's not the moment for risky bets or chasing quick wins. Instead, discipline and smart, careful planning are your best defense against uncertainty. Track your spending closely, set clear priorities, and look for targeted opportunities to grow your wealth, no matter how small. Use budgeting tools, review your expenses, and make sure every dollar is working for you. The road ahead is challenging, but it's not impossible. With determination, support, and a willingness to adapt, you can weather this storm. Stay sharp, stay disciplined, and keep your eyes on your long-term goals. With the right mindset and habits, you'll not only survive this squeeze, you'll come out stronger. The key? Know exactly where your money's going, make every dollar count, and don't lose sight of your financial future. Let's keep moving forward, together. Main Street is feeling the pain. Small businesses are getting hammered by high borrowing costs and rising expenses. Loans for expansion or equipment now come with double the interest, slashing profits and stalling growth. Inflation drives up the cost of supplies, utilities, and wages, squeezing margins razor thin. Owners can't just raise prices, customers are pinched too, but not all sectors suffer equally. Essentials like consumer staples and healthcare hold up better. Discretionary goods, luxury items, high-end electronics take the biggest hit. Spotting these differences helps you see where the pain is and where opportunity might be. Your spending habits are shifting, maybe without you even noticing. The pressure's on, so people are trading down store brands over name brands, home-cooked meals over dining out, delaying big purchases. It's not about being cheap, it's about being smart. Budgets are focused on needs: housing, food, transportation, healthcare. Discount stores and warehouse clubs are thriving, while high-end retailers struggle. The domino effect starts with your wallet and ripples through the economy. The takeaway? Track your expenses, separate wants from needs, and trim the fat. Make intentional choices. Cut back on small luxuries to afford what matters most. In 2025, disciplined spenders come out ahead. Take control, tell your money where to go. Money. Let's talk about your biggest expenses: mortgages, car loans, and credit cards. Cheap borrowing is gone. High rates are the new normal. Mortgages have doubled, making homeownership out of reach for many, while rents stay high. Car loans are pricier, pushing buyers to used cars and driving up repair costs. Credit card debt? The silent killer. Average rates are over 20%, and balances can spiral fast. The rule: pay off high-interest debt aggressively. It's the best guaranteed return you'll get. Rethink big purchases, avoid new debt, and focus on financial flexibility. In this environment, every interest dollar saved is a win. Don't let debt trap you, attack it head-on. Stay vigilant and protect your wallet. All eyes are on the Fed, the economy's doctor walking a tightrope. Their goal: cool inflation without crashing the economy. Raise rates too long, risk recession; cut too soon, risk inflation roaring back. Most experts expect the Fed to hold rates steady for now, watching inflation and jobs data closely. Maybe a small rate cut late in the year, if the numbers cooperate. The era of ultra-low rates is over. Higher for longer is the new reality. That means continued pressure on loans and credit. The Fed's cautious, so plan for high rates to stick around. Time for solutions. How do you protect and grow your money now? First, consider tips. Treasury inflation-protected securities. They rise with inflation, offering stability. Real assets like real estate and commodities, gold, oil, can hedge against rising prices. Can't buy property? Look at REITs, real estate investment trusts you can buy like stocks. In stocks, focus on defensive sectors, consumer staples, healthcare, utilities, companies with pricing power and low debt. Avoid companies drowning in debt. High rates hurt them most. Diversify. Don't put all your eggs in one basket. Spread your investments across assets to reduce risk. Stay flexible and keep learning. In tough times, quality and discipline win. There's always a bull market somewhere. Find it. Booyah! Our economy's not an island. Global forces matter. Energy prices are set by world events. Conflicts, OPEC decisions, and Asian demand can spike oil overnight. When oil jumps, everything from shipping to manufacturing gets pricier. Global supply chains are still fragile. Disruptions mean shortages and higher costs. The Fed can't control these, making their job harder. For you, it means staying alert to world news. Global headlines can hit your wallet fast. Being informed makes you a smarter investor. Watch the world, not just your backyard. Here's your playbook for 2025. Stay smart, stay nimble, and stay in the game. Track your spending, attack high-interest debt, and separate needs from wants. Invest wisely. Look for inflation-protected bonds, real assets, and high-quality stocks in defensive sectors. Diversification isn't optional, it's essential. Stay flexible. Markets and data change, and so should your strategy. Read the news, watch the market, and keep learning. Don't let fear drive your decisions. Knowledge is your best weapon. Build good habits now. They'll serve you for life. Tough markets don't last, but tough investors do. There's always a path to victory. Find it. Your financial future is in your hands. Be disciplined, be proactive, and take charge of your money. Booyah!